Hey, what's going on, people? Hope you guys are doing well today. We're back in lockdown here, so I decided to just give you guys a quick video on how you can literally 10x your capital, like your savings, instead of leaving it to do nothing in the bank. Whether it's in a, see what most people do is they leave their money in the bank, either in their checking account or in like a term deposit, and it literally earns like 1% or 1.5% per annum, which is basically nothing. Now remember, guys, for this isn't financial advice. I just want to show you guys what I've done with my money and how I've actually managed to 10x my capital by doing one simple little thing. So like most people leave their money in a term deposit and it literally like earns no money. It just sits there. And the thing is, guys, you got to understand that you got to stay ahead of inflation. If you guys don't know what inflation is, it's basically things go up, prices go up, house prices go up, the vehicle prices go up, petrol goes up, food goes up. So what you got to do is you've got to your capital and your salary and all sorts of things have to stay ahead of the curve of inflation. So I just want to take you guys quickly to if you do a simple Google search here on term deposit rates NZ, it'll show you what the banks are offering you with your on a basic term deposit. So if we come down here, we can see the main banks and everything are only offering about 1.4%, 1.2%, and this is all per annum, so every 12 months. There's only a few little investment companies that are offering you 3.5% and so on. But if you look at the main banks, if you look at the main banks, look how shocking this is, guys. Like 1.10, 1.20. I'm in no way, if your money is with the bank, then that's fine. That's totally up to you. As I said, this isn't financial advice, but I just want to show you guys what I've done, where I'm earning 10%, roughly about 10% per annum. So if you look at these, the banks are going to give you 1.2%, 1.4% if you're lucky. But there's a simple thing where you can actually, if you come here, you do a simple thing here and you Google best managed funds NZ. Now, if we come here to moneyhub.co.nz, our favorite managed funds. Let's look at this. All right, this is where I just want to take you guys through a couple of companies here. So the first one here, we've got Milford. It gives you a bit of a track record and how a bit of a history on the companies and so on. Uh, I'm here with Fisher Funds. This is the one that I've chosen. You can choose any one of these. Do your research thoroughly though, and make sure that all these companies have been around for 30 plus years, I'd say, and all FCA or FSCA regulated. So the financial institutions and all that, they must be regulated by these big financial institution boards and so on that control banks and that control all these investment companies. So they must be fully regulated by the FCA. I think in New Zealand it's called the FSCA. So basically, if we click on the company that I'm with, now you can come here to funds and performance. So they give you options here of you can go into the New Zealand Growth Fund, you can do a mixed asset portfolios. The one that I'm with is like a mixed asset portfolio and it's called the Balance Fund. So like with these funds, your funds will go into an international growth fund, it'll go into the New Zealand Growth Fund, it'll go into property and bonds and infrastructures and all sort of things safely where your money is actually invested. So like if we come here to fund performance, I'll just show you the difference here. If we go back to banks quickly, look at these 12-month interest rates. As I said before, I'm no way knocking down banks. It's totally up to you if you want to leave your money with a bank. But look at these interest rates, 1%, 2% if you're lucky. So coming back here, we can clearly see that if you're looking at the over 12-month period here and if you put your money in a managed fund, like the one that I'm with is the Balance Strategy, you can see here over a 12-month period, it's doing 12.2%. On average, it's doing, from my experience with them, it's doing about 10%. So it can fluctuate, it can go higher, it can go a little bit lower, but on average, it's doing about between 10 and 12%. You can select the one that you want to go with, but I was advised to go with the Balance Strategy. I've also got my KiwiSaver in the balance strategy as well. And then my main savings I've got in a separate balance strategy. So I've got two accounts, one KiwiSaver account and one separate account, but both basically put into the same fund. It doesn't matter if you are a resident of New Zealand or if you are on a work visa. You won't be eligible to open up KiwiSaver with these guys if you are on a work visa. But if you are just purely looking to invest your money, you can definitely just put it into one of these funds instead of having it in the bank. So basically, if we come back here, another good one here, which I should have actually looked at first. I'm thinking of maybe looking at these guys again. If we come here to Milford and we look at funds and performance, the investment funds, if we click on the balance fund here, I'm just illustrating you what the balance fund offers you here. On average, you can see here it's doing about 16.9% per annum. All right, since inception, it's done 10.25. Okay, then your fee is going to be 1.5. Like with Fisher funds, the fee is all calculated in there. Normally, these returns the fee is already calculated in there, so you don't have to worry about the actual fee. But bear in mind, you will get taxed as well. But it's the same with. It all depends on your PRR or your tax rate in the country. And usually the accountants, from what I hear, they actually reduce your tax quite a bit. They find ways to really minimize the tax. So you're actually nearly making whatever they show you is almost like 90% of this is what you're going to get back on your return. But bear in mind the banks, if you look at the banks, they give you a 1.2, 1.4 interest rate. And on top of that, they tax you as well, which is like ridiculous. So guys, before we move on, if I just want to show you this, how shocking this is. So if you know how compound interest works, so basically if you had to go with the bank, if you come here to this calculator side and you come in here to compound interest, so if we go with a bank, and let's just say we'll give them the benefit of the doubt, and let's say we go with them and we have our money invested at 1.4%, just as an example, in a term deposit. We select this over a year, which it's based upon. Compound interval will be 1 year. So if we click on calculate, in 1 year, based on that 1.4%, after 1 year having it in the bank, you're going to basically be earning $700. Okay, if we look at the monthly breakdown, it's basically your money is going to turn out to that, right, with a $50,000 investment. Now, let's just say we went with one of those managed funds and we're doing 10%. Now, bear in mind, guys, you're not working for this money. It's just sitting there. It's all being invested for you. You're not doing anything. It's basically free money, right? So we do 10%. It's the same interval over 1 year. So based on 1.4%, we earn $700. Now we're investing it with a managed fund, and we're doing 10% per annum. Now look at the difference, guys. You've earned $5,000, and you haven't worked for it. You've just simply taken your money and put it in a proper investment firm that invests your money for you. You're not doing anything. You're not working for it. It's basically free money. You will get taxed on it a little bit, but that's fine. Look at the difference, guys. $700 turned into basically you've more than 10x your money. Look at that, guys. Look at the breakdown. So this is just I'm just making you guys aware of the major difference. And you can even go higher if there's a good year. If these guys do even better for you that year, which is highly possible, they've done that for me as well. You can make $6,000, if it's a good year. Like, it all depends on which plan you actually go with. But the balance strategy, the one that I'm with, is just safe. It's a lot safer. It's in between aggressive and conservative. So that's but just looking at this, it's crazy, guys. So that's like if you're in New Zealand or Australia, you can go for these sort of companies. Australia, anywhere in the world, it doesn't matter which country you live in. Anywhere in the world, you can find these managed funds, or they called asset manage funds, or in the US they're called mutual funds. So if we come here to the US, if we click here, if we do a quick Google search on top fund managers in the US, so like if you are in the US, you can come here and they give you a big list of all the best companies that can actually, where you can put your money. Instead of the banks, you can use BlackRock, Vanguard, Fidelity Investments, JP Morgan. There's a big one here that I normally hear of. I think it's called Charles Schwab Management. So it's the same, pretty much the same thing in the US. It's just different. It's called asset managed funds. So you can do that, guys. So as I said, this isn't an investment advice. I'm not knocking down the banks, but I'm not promoting any of these companies. But the thing is, a lot of a lot of people don't know about these things and are not, because these companies and so on, these investment companies are not really well advertised. You do hear them on the radio and all that, but not a lot of people actually dive deeper and actually do their research. Most people just leave their money in the bank and they think that's the best option, that's the safest option. But these companies here are all fully regulated. They absolutely, if you do proper research into here, who these companies are and everything, you'll actually see that these companies have been around for ages. A lot of these companies have been around for decades. They're fully regulated and everything like that. And you almost guaranteed like these returns on your money. So this is just a bit of investment advice because, I wish I knew this sort of stuff. In South Africa, where I was living, there were also this sort of thing where it was called like managed portfolios. My dad actually taught me this trick over here. I think my uncle and all them, they have their own investment company where they actually do this themselves and they have clients. So I come from a background where I understand a little bit about this stuff, and we've always known how to beat the bank, just by doing this simple hack over here. If you've got a big chunk of money, say you've got like $500,000 or $1,000,000, you can literally put your money into this and you can live off it. Because the good thing about these funds is like with a term deposit, if you do a term deposit, you're actually fixed. Depending on the option you choose, you're actually fixed into a 12-month term deposit where you can't touch it. But with these guys here, you can actually pull out your money. You can do regular withdrawals. As soon as you put your money in, you're allowed to withdraw it out. So there's no tie down period or anything unless you make it a fixed tie down period. There's various options you can select where you can't touch the money, or you can have it flexible where you can touch the money. Like if you're sick of renting out your properties and you decide to sell all your properties, if you're sick of like renting them out to people and your properties are getting damaged and you want to cash out, and you can put all your money into this and basically live off it month to month. You can just do withdrawals. So they give you options to do regular deposits and also options to do regular withdrawals. So it could all be set up to your bank and everything like that. And basically, like with myself, I also trade my own money. So like I'm trading primarily the NASDAQ. So if like, I don't trade all my capital. As I said, I trade a certain amount of capital. So if you want to learn more about trading, click the link below in the description and I'll actually help you out with your trading. I've got a brilliant trading course that'll actually show you how to trade your own money. So as you can see here, like on the NASDAQ, the reason why I'm trading the NASDAQ and all these indices, sometimes I trade the S&P 500, is because, as you can see, these 80 to 90% of the time the markets here are going up. This market is going up. As you can see over here, we're in a rising wedge. So as you can see here, it's if you understand all these little things, you can actually trade your own money or a portion of your own money and grow your own money. And then what I do is I trade my own money and then I take it and I put it in this managed fund to grow safely. So as you can see, I'm looking at the NASDAQ. I've drawn up all my lines over here, my rising wedge. This is a bit of a channel. It's doing a gradual squeeze. It's more of a channel but it is turning into a wedge. It looks like it's turning into a wedge, but the squeeze is very gradual. So I'd be looking at getting back into the Nasdaq, as it reaches this support level on this trend line over here. As you can see, like right over here, I'm looking at a nice setup, basically like that. Or if I drop down to a lower time frame, such as the 4 hour, we currently, if we look, I've drawn a channel within the channel. I can take a few day trades this week, possibly in this upper channel. So that's, so I can day trade, or I can maybe go back to the daily time frame and look for a long-term position based on this rising wedge. There's multiple strategies you can use. You can use indicators, you can use chart patterns, you can use supply and demand levels. All of that is available in my course if you actually want to learn how to trade a portion of your own money. But besides that, guys, this was just a bit of investment advice. Something that I wish I knew when I entered this, or something that I should have looked into deeper when I entered this country. I couldn't really find these companies, so that's why I made this video to actually show you guys these companies, and so you guys don't have to. You might be on a search on. You might be looking to invest your money and grow your money quicker, but you're not sure how, and you've been doing research. And often when you do research, you come across the wrong things first, and you won't find the right things immediately. Eventually you will if you really dive deep, but often you'll get the wrong things come up, like when you search, all the basic things, all the scammy things and all that seem to always come up first. So I just wanted to make this video just to pinpoint the exact things that I feel are the correct ways to go in terms of investing and the safest options. So have a good week ahead, guys, and hope this video helped you out. If you found some value, please like, comment, and subscribe. And I'll catch you guys in the next one. Peace.